Hello, I'm Natasha Chilingarian.
And I'm Michael Ogden. This is Shared Accounts with CU Times. Instead of jumping into the episode today, I have come up with a new game I want to try out on Natasha and producer Zach. It's a game I feel like people could actually play with their families when everybody's home during the holidays or maybe on a car ride to the middle of Ohio, whatever. And producer Zach, come on in because this is a game I came up with on the flight back, Natasha, from our Luminaries Award.
Okay.
So this game I am calling Dramatic Hits. So here's the premise. I have picked some big hit songs from the early 2000s, and I'm going to dramatically read the opening lines and lyrics, and you two try to guess the song. And I'm really going to overact these readings, kind of like a high school drama kid. So I
Okay.
thought this might be fun. I've made it, I think, pretty darn easy. But what I'm going to do, I'm going to perform the opening lines. Let me get through them. And you two just chime in if you have a guess.
Okay. Well, this should be up our alleys, hopefully, because I think Zach and I are around the same age in the early 2000s. It was like
Yeah,
late college, coming out of college time frame in life. So we were
sure.
Yeah, that's
listening to songs in the club and whatever. I mean, back
Zach,
then.
where
So
were
yeah.
you? Where were you in the early 2000s, Zach?
graduated high school in '04
Okay.
and was in college sometime from 2004 to 2019.
Okay.
Oh,
So
okay.
I picked this part of music history just because I figured you two would be paying attention around this time. So, okay. So here's the first song. I have four songs.
Okay.
First song, absolutely easy. Okay. I'm just setting it out. Okay, here we go.
Okay.
Who let the dogs out?
I think I
Who?
know this
Who,
one.
Who?
who let the
Who?
dogs out?
Who? Who let the dogs out? Who?
Well,
Who?
yeah,
Who?
that's
Who?
the name of the song.
Who?
But
Okay.
who yeah, I don't remember who sang it though. Who was it by?
Bahaman.
Yeah.
Okay. Yeah.
Year was 2000. Okay, that was the easy one. This one is number 2.
Okay.
Okay. What ya gonna do with all that junk? All that junk inside your trunk? Okay.
Black Eyed Peas, right? Black
Yeah.
Eyed Peas. What you
Mm,
gonna do?
Do I have to answer?
What was it
Yeah,
called?
go
I don't
ahead.
remember that. What was the name
My
of it? Go ahead,
Humps.
Zach. What's the name of it? My
That's
Hump.
it.
Yeah. Yeah.
Okay. From
Da, na,
2005.
na, na, na. Okay. Sorry.
Was that
Okay.
Black Eyed Peas or was that Fergie?
No, it's Black Eyed Peas
Okay,
before she went solo.
gotcha.
Okay.
Okay. Here we go. Here's number 3. It gets a little bit more difficult, but barely. Okay. Hey, you. I don't like your girlfriend. No way. No way. I think you need a new one.
Avril Lavigne, Girlfriend?
Ding, ding. Nailed it. From 2007. Zach, did you get that one at all?
I
Sorry, I'll give you a chance on the
I was gonna
final
guess
one.
Pink.
Oh, that
So
would have been a good
It's
guess.
close,
so
yeah.
no.
And I realize it's actually hard to guess when you're doing a dramatic reading, Okay, here's the last one. It's a little bit longer, but hopefully you'll get the vibe and understand the song. Okay, here we go. I hopped off the plane at LAX
Oh,
with a
Party in the
dream.
USA.
Good
Yep.
job, Zach.
Miley
That was
Cyrus.
quick.
Oh yeah.
Yeah.
Good one.
Okay, I won't even finish it. That's
You weren't
fine.
you weren't sneaking that one by me.
No.
These are just too easy, Michael.
I know. I didn't want to make it too hard. I could have, but, I'll make it harder next time. I
Okay.
just thought that would be
Fun
fun.
though. Yeah.
Okay, do you
Maybe I'll
like
do
that game,
one.
yes or no?
Yeah.
Yes.
I liked it. No, I did like it. Yeah. I think it can be a continuing game.
Great.
Maybe we can do one with you. I know you're a little older than us, so like the
80s, I
80s,
guess.
80s
Some
hits,
70s.
80s one hit wonders, maybe or something.
Maybe.
Yeah.
I don't know. Let's not talk about that depressing thing. Let's get on with the show. Welcome to Shared Accounts with CU Times. Coming up, we're talking with Justin Conrey. He is president, CEO of CU Business Group, a business services QSO based out in Portland, Oregon. He has been the CEO out there for a couple of years, and we're going to be catching up with him, talking about commercial lending trends, challenges for credit unions that are providing financial services to businesses, both large and small, and a whole lot more. First up, we have to take a break from this week with Natasha. Hey, Ann.
Hey, Em.
Hey, how are you doing?
I'm doing okay. Yeah, I
Good.
enjoyed the opening game a lot.
Oh, good.
Yeah.
Good. I loved it. I have some work to do. I actually had a really hard Britney Spears one in there. I was like, it was kind of
Which one
annoying.
was it? Which one? Because I know pretty much every Britney Spears song. So
Honestly, I can't remember, but it had like 11 yeahs at the beginning. And so it would have been
Hmm.
me going, yeah, yeah, yeah. It'd be doing, and it's kind of annoying.
Okay. Yeah,
But
that
we'll play it again.
we should try it again. Yeah, I think. Yeah, I don't know which one you're talking about though. So maybe I wouldn't have gotten that
I'd have to look
one.
it up.
I'm not sure. I
It's
don't know. Maybe
probably
Baby
best you
Step.
didn't do that one because I would have just been screaming Usher, increasingly
Uh,
angry.
Well, yeah, that
yeah.
would have.
Oh, the other thing I learned though in this exercise of me looking up songs, and again, I hope people play this in the car, and stuff because it's super easy to look up lyrics. But most of them were so dirty, and I was really making me laugh.
You're
And
like, which one is appropriate?
yeah, so like my
Right.
humps was the non-dirtiest, I could find, but it also made me laugh.
Yeah, and weren't we talking earlier on Slack about the Baby One More Time video, like,
I think we
rewatching
just
it
were.
now? Yeah, how it, like, didn't age too well and was a bit
No.
like, "Whoa." Kinda reminds me of you've seen that docu-series, Quiet on Set. You're like, "Wow,
Oh, yeah,
that's
no,
really
I'm not
bad."
watching that.
Things that they got
Hey,
away with, yeah.
let's get into the show really quick because we had quite the conversation with Justin. Now, I do want to ask, and I've got to find my list, but Natasha, what'd you watch this past week?
Yeah, so I just have one to bring up because I know we have a
Please.
pretty long show today. Everyone's kind of been talking about it, the new Martha Stewart documentary on Netflix.
Oh, what'd you
I
think?
watched on Friday, really enjoyed it, yeah, and
Huh.
because I didn't really know much about her background, her life, or anything, but yeah, I really like her after watching this documentary, and I think that's been a reaction of a lot of people. I think we know her from when she had to go to prison and kinda think of her as just this rich, really privileged, like, person who got away with, and I
Sure.
didn't even remember what the charge was. I thought it was,
Yeah.
like, tax evasion or something, but it's
I thought
actually,
it was
like,
insider
it was
trading.
insider trading, but
Yeah.
apparently she just followed, like, what her attorneys were telling her to say, and then ended
Yeah.
up being like, "Oh, you lied to the interview with."
Oh, that was it. She lied to the FBI, I think
Yeah,
was the
yeah,
thing. Yeah.
right. But then she had this incredible comeback,
Oh, yeah.
afterwards, and then I love how, like, they talk about her friendship with Snoop Dogg, which is, like, one of the most unlikely friendships out there, which is
Yeah.
hilarious. So, yeah, it's a good one, it's fun. Yeah, I really like her. She's just very blunt, very shameless, and,
Sure.
yeah, I think it's great.
Oh, good.
Yeah. What about you? What did you watch the past week?
Yeah, I'll bring up one, and I'm a little embarrassed to say I never saw this movie before until a few days ago. It was 1998's The Big Lebowski. I
Oh, okay.
finally
How'd you
watched
like
it.
it?
It was okay.
Okay.
Honestly, I was like,
I've heard of that movie. I've seen it pop up on streaming, and I'm like, "Oh, I should probably
yeah,
watch that." One notable thing from that movie is there's a sweater that he wears
yeah, yeah, yeah,
from
yeah.
Pendleton, and I actually bought that sweater for my boyfriend as a Christmas gift last year.
Oh, oh,
And
that's
I'm like, "It's
funny.
the Big Lebowski." Like, we have I don't know if he's even seen the movie, but it's like
Oh,
a really
interesting.
flattering sweater, like high quality
Well, that's
sweater.
good.
So, yeah, I remember that, and he's like wears it like every day. So I just think of that movie every time I see him 'cause I keep seeing the
That's
sweater every
good.
day.
I think I knew way too much about it over 30 years,
Yeah.
or whatever, and it was fine. I enjoyed it. I love the Coen brothers. Jeff Bridges is just wonderful, but it was fine.
Okay. Well,
You know,
yeah, cross it
I'm
off your
glad I
list soon.
watched it.
Great. Okay. All right. Well, as you said, let's go ahead and move on to our interview. We had a very, very meaty interview today and
Oh
a kind
yeah.
of longer episode. So, but I just wanted to say, bringing on Justin Conrey, I have a kind of a cool background with his organization, with
Hmm.
CUBG in Portland. So when I was living in Portland, I think it was 2017, I moved back there like for a little while, a brief while, had my own
Yeah.
apartment. And actually, Justin's predecessor, Larry Middleman, who was the founder of CUBG, he just reached out to me randomly. Like, I guess he
Mm.
saw maybe on LinkedIn that I updated my location to Portland and said, oh, hey, like we used to do some work with CU Times. You guys kind of dropped off our radar for a while. Let's meet
Hmm.
up. So we ended up all like meeting for lunch, and it started this
Nice.
really cool relationship over the
Aw.
years. Just would meet up when I was in town. I've attended their conferences a few times, and they've been
Yeah.
really, really nice, really helpful with their contributions. And
Well, that's
now
great.
with Justin, so Larry's now retired. Justin's taken his place, and so yeah, I
Yeah.
was excited to continue the relationship. We had a very thorough conversation. He has a wealth of knowledge, obviously,
Hmm.
on commercial lending and all that. One thing we talked about that I thought was really interesting and unique is kind of a predicament that credit unions are in that have a CDFI designation and are using that designation to do more business loans to kind
Hmm.
of get around this regulatory loophole. And I guess some of those credit unions are at risk of losing the designation. And so he has some really good tips and strategies for credit unions in that situation. That was kind
Yeah.
of unique. Yeah. So yeah, I had a good conversation with him. We ended with a debate over the best tacos in Austin, Texas. That was a fun
Hmm.
conversation between you two.
And a
Uh,
much longer discussion about pot
Longer than we expected. Yeah.
than
Yeah,
we
that too.
expected.
That's coming up. Yeah. So stick around. Yeah, lots of fun topics coming up, including the holidays, of course, which are around the
Yeah.
corner. We have all of that coming up next.
Hey, listeners, I want to tell you about our exclusive editorial product for subscribers only called the Executive Briefing. If you haven't heard about it, here's what it is. It's a monthly newsletter available by subscription only. It's comprised of exclusive editorial content that we work on and analysis of credit union data, trends, and news. Information you're not going to find anywhere else. It's only available by subscription. So I've said that a couple of times. I'm going to stop. You're going to get access to this content only in your inbox to help grow the organization, better serve members. In September, if you remember that month, we analyzed AI tools used by credit unions. In October, we broke down the overdraft and NSFE landscape. And in November, we broke down the donations given by credit union lobbyists to those candidates and what did that mean for the election. To subscribe, go to cutimes.com/subscribe. That's cutimes.com/subscribe. This is one of the new ways we're expanding our CU Times digital world for you, the executive briefing at cutimes.com/subscribe.
Joining us in the virtual studio today is Justin Conrey, President and CEO of CU Business Group out in Portland, Oregon. Hey, Justin, welcome to Shared Accounts.
Hey, Natasha, thank you so much for having me.
So happy to have you. Yeah. All right, Justin. So let's start off kind of just checking in here because I know we saw each other kind of recently because we were both based in Portland. But I know we had an interview about a year ago after you'd been in the CEO role for a year. So now you've been in the CEO role at CUBG for 2 years now. You recently hosted both of your East and West Coast conferences for the second year in a row. So I just wanted to see how's it all going for you and how did the conferences turn out and everything?
It's going great. It's interesting to be reminded that that was 2 years ago that I made the
Right?
switch. It doesn't seem quite like that. It seems like we just met last week. But no, thank you so much for your support over the years of CUBG. Well before I came here, and for the 8 years that I've been a part of the organization, it's been great. The transition has been interesting. It's been a different time. I think I can talk a little bit about the industry a little later on, but it's really been a smooth transition in many ways. I think that's thanks to our founder, Larry Middleman, for creating a great culture and a great organization over the last
Yeah.
20 years. It's really easy to step into a role with an internal hire, with somebody who has preceded you, who's laid a great foundation. So I was very fortunate to have that. Can't thank him enough, and all of our senior team here at CUBG who have been around for a long time for really making that transition easy. I think the most challenging pieces pre-pandemic, we were an in-person organization like most, and now that we are 2 years, 20 years past that pandemic, it feels like we're a fully remote company. We have employees in 16 different states. We
Love
are
that.
still based
Yeah.
in Portland, but it's a different culture. So maintaining that culture and that identity and that close-knit group of employees in a remote environment versus an in-person environment has been challenging, but it's been great. And things like our conference really allow us to bring our people together, and we utilize technology as much as possible to see each other on a daily basis. So It's been different, but it's been good. Those conferences are a wonderful opportunity, not just for us as an organization to get together, but to bring people throughout the industry together in a conference that's specifically tailored towards what we do in commercial lending. And there aren't many conferences like that. There's a lot of
Yeah.
large conferences that have commercial lending tracks and things like that, but not many that are 100% dedicated to it. So you're right. We just finished our 2 conferences. This year was the first year back to us being a fully remote company that we didn't have our West Coast conference in Portland. That was always a mainstay.
Right.
That's because our headquarters was here, and we would allow people to be able to come to the office and see the people that they work with or that they talk to over the phone back then. So it was a great opportunity to connect with our clients and our staff.
Hmm.
We are no longer anchored here, and that provided us the opportunity to get out and explore a bit. So we've always had an East Coast conference to get closer to our credit unions on that side of the country. We serve about 700 credit unions from coast to coast. So we want to make it convenient for our credit unions to be able to interact with us. So our East Coast conference has always rotated different cities.
Yeah.
This is the first time we took the Portland conference on the road. So we were in San Diego, a great location. So it was nice to get down there and see everybody. The conferences were wonderful. We had a record number of our partners and vendors that were able to attend and interact with credit unions. Credit unions are traveling a little bit more than they were last year, so we saw attendance go up a little bit. I don't think it's back to where we hope it'll be in the years to come, but we got to have great interaction with our clients and wonderful content. We try to mix commercial lending content,
Yeah.
leadership content, because not only are we all part of organizations or credit unions in the commercial lending space, we're all leaders of people, and we try to make sure that we balance that content and make it a holistic approach to commercial lending and leadership. So it was great. Our East Coast conference was in Asheville, which is a wonderful city, but that presented a few challenges. That conference was a little interesting. We ended our conference the day before the hurricane hit and kind of ravaged that
Oh,
area.
wow. Okay.
Our thoughts and prayers go out to everybody that were affected by
Absolutely.
that and continue to be affected. And we were all fortunate that everyone was able to barely get out before that.
Right.
But what a tremendous area and what a wonderful group of people. It really just broke our hearts what happened after we left.
Yeah.
But it was a great conference, and we hope to be able to return there in the future.
So, Justin, let's get into some of the details on the commercial lending and the details of some of the things you guys cover at the conferences, because typically at those things, you include a state of business services presentation that shows a real high level trend of credit union commercial lending. That's what we want to really talk about today, and some commercial deposits from the past year you guys talk about. What were the main takeaways from what the most recent data shows about credit union commercial lending and deposits activity from the past year?
That's really interesting, and it's been an interesting year, as I just mentioned. And that's we always open the conference just to check in and say, how are things going over the last 12 months? And we have credit union attendees from all across the country in different markets. And, commercial lending and the effect of our industry is felt locally. It really depends on where you are and the geography and the part of the country that you're in and how things are affected. But it allows everyone to sort of take a pulse on what's happening nationwide, and are we part of the average? Are we above average? Are we below average? But I think everyone can agree it had been kind of a tough 2-year stretch. Everybody on the consumer and commercial side was affected by the Fed rate increases as the Fed fought inflation, and they were increased at a record pace, and every meeting there was an increase, and it was really tough to get commercial loans done during that period.
Yeah.
Investors, especially in the commercial real estate arena, rely on the ability to be able to project cash flow and the cost of debt in the future. And when rates are changing between an initial conversation about a loan and getting to the closing table, it makes it really tough to get a deal done. So we saw commercial lending really fall, and it's continued into 2024. I think we were a little bit optimistic going into the year that we might get rate cuts earlier in the year, but inflation's been really stubborn and those cuts haven't happened until recently. So I feel like we're feeling a little bit of the momentum of those rate cuts now and things are improving. We felt like we would feel that a little bit earlier in 2024, but overall, just year over year, commercial lending's down over 10%. So again, to the stubborn inflation and the rate cuts not happening, credit unions have seen a drop in commercial loan production. And then over a 2-year stretch, it's down almost 34%. So that
God.
has been a tremendous impact to not only us as an organization, but as credit unions as a whole.
Hmm.
A lot of that was rate related, but some of it was liquidity related. Credit unions were challenged with liquidity as the rate hikes began. Credit union capital flowed out as rates were adjusting to the higher rate market, and credit unions were a low cost provider for a while. I think credit union liquidity has been tough to recapture,
Yeah.
but credit unions are getting there and we've seen some improvements. But it was a tough 2 year stretch.
Hmm.
Specifically in the commercial real estate market, that's where credit unions are highly concentrated. I think the data we presented was 93% concentration in credit union commercial portfolios in commercial real estate. So it's a very high concentration. That's down a little bit from years past. It was closer to 95, I think, in our
Hmm.
last conference. So we've made a little bit of progress in diversification, but we are very susceptible to the ebbs and flows of the commercial real estate market. So we saw a lot of that over the last 2 years, and the data that we presented at our conference reflected that. And we also noticed some interesting shifts in where commercial lending is happening. Credit unions, by nature, are limited to the amount of commercial loans they can hold in their portfolios for the most part. So
Yeah.
while we are highly concentrated in commercial real estate, in the overall commercial real estate market, we don't make much of an impact as a lender. But it's always interesting to monitor where capital is flowing and what lenders are stepping into the space. It's usually largely dominated by banks, as you can imagine, the largest banks in the country. But we saw a shift this year that was really interesting, and a data point that we wanted to present to everybody, that we saw private lenders, so kind of unregulated lenders that are not banks, credit unions, financial institutions, took over the top spot with 35% of the commercial real estate lending that happened over the past year. Typically, banks are at about 45%. Credit unions are at a much, much smaller percentage of that. The life companies, CMBS lenders make up the rest of that. But
Yep.
banks were under 30% and private lenders jumped up to 35%. So it was interesting. I think that speaks to some of the challenges that we talked about at the conference with maturing loans, with loans that were done at really low rates in the past or maturing
Hmm.
with much higher rate environment. That makes renewing those loans or refinancing those loans on the commercial real estate side relatively difficult. Private lenders are able to have creative financing. They can do interest only, things like that. So I think they've stepped into that space to create bridges until those rate environments allow those properties and those commercial real
Yeah.
estate loans to
Yeah.
be able to refinance to more conventional commercial products. So that
Very
was
good.
an interesting
Well,
change.
yeah.
We've seen performance be pretty good. I think there was concern that things like the office market would create some turbulence in the commercial real estate industry. We haven't seen that so much in credit unions. Delinquency was up about 30 basis points, which isn't high, but it is increasing. But that office threat kind of remains out there. I think Todd Harper, the chairman of the NCUA, said yesterday in his testimony or the day before that they're watching about 26 credit unions with material exposure in the office sector. But overall, the credit union exposure isn't very high. It's not a big threat to credit unions, which is fortunate. Credit unions hold about 2.5% of commercial real estate office
Sure.
overall, which isn't high.
Mhm.
Credit unions also don't play in the downtown commercial real estate office market. Those properties are usually 100, 200 million plus. That's usually out of the realm of possibilities for credit unions to finance.
Okay.
So that's where I think we've seen a lot of the impact. I know here locally in Portland, we have one of the highest office vacancy rates in the country, and a lot of that's
Wow.
concentrated to the downtown corridors. And I think that's replicated across large markets
Right.
everywhere. Credit
Yeah.
unions just don't have exposure there. Where credit unions are involved in office lending, it's in the suburbs or secondary and tertiary markets. Those are performing better. And I think that's where some companies are downsizing downtown offices and relocating closer to their employees to facilitate a hybrid work environment. Those markets are doing a little bit better. So we're not extremely worried about that. But there is some delinquency creeping up. I think overall the economy is sort of in a flux. So there could be some potential trouble. But I think credit unions are still in a great position as long as credit unions continue to be able to make commercial loans. And we see some improvement from the stats that we've had over the last couple of years. I think the ability to increase deposits is going to be important for credit unions.
Okay.
Liquidity was a big issue in driving that 34% decrease. That's still out of whack. It's about 55% deposits to loans. So we present that data as a way to remind credit unions that it's important to think about ways to increase commercial deposits. If that's closer to 1-to-1, credit unions might not have the liquidity challenges that they have and be able to continue to make commercial loans even when times are a little bit tough.
Right.
There's optimism going into next year. I think a stable rate environment, if anything, even if it's a higher rate environment than it has been historically, is important as it allows commercial lenders to be able to project out cash flow and commercial investors to be able to project out project revenue. So that's really important. With it being stable or at least downward facing, that will create more momentum and more activity. So we're optimistic about that. We're also optimistic. There's a lot of projections out there. The Mortgage Bankers Association always tries to forecast commercial real estate activity. And again, that's important for credit unions because of that concentration. And they're predicting about a 24% increase in activity for 2025. So we'll see how that pans out. But the overall sentiment was it's been a tough couple of years, though we are optimistic going into 2025 as an industry.
Okay, great. Well, thanks for addressing that because that was going to be one of my questions was, looking into next year with the election results and how that might impact the economy. So that's good to hear. Sounds like it's been a challenging couple of years. I wanted to switch over now. There was something we talked about this. It was actually when we met for lunch, you brought it up, and I thought this was a really interesting topic, part of why we wanted to have you on. You talked about a trend in which credit unions, they're using the loophole of being a CDFI, a community development financial institution, in order to make more commercial loans. But then some of those credit unions are now at risk of losing that status because of, I think you said it's because of changing demographics in the areas they serve. Can you kind of just talk about this a little bit and fill us in on this trend and like what you're seeing with these credit unions that are in this predicament?
Sure, that's been a tremendous rule that credit unions have been able to leverage to increase their commercial loan portfolios. That's always been a challenge for credit unions, that we're limited in the amount of assets we can have in commercial loans. So that limits everything from the ability to make loans, the ability to serve membership, the ability to grow and diversify the products, and the ability to have adequate staffing to grow. So credit unions have leveraged the low income designation or the CDFI status to be able to go above and beyond that cap. So it's been a great tool. It's designed to allow credit unions to utilize that to be able to serve their community better and be able to make more commercial loans. So the challenge that credit unions have had recently is we are sort of at this state nationally where there's a large generation of retirees entering the market, and retirees are relocating as they retire. There's also been a mass relocation of individuals and families to more remote areas. So what we're seeing is these low income designations are given to the credit unions based on the markets that they serve and the census tracts where they have the ability to serve their members or what's in their membership or where they have branches. So those census tracts are being affected by retirees and people moving away from central business districts or downtown corridors to more remote communities. And that's changing the designation of those census tracts. So a credit union might have the designation today, a new census tract comes out and it changes the demographic of one of the areas that they rely on for that designation, and they can lose that. And that's a big challenge because if you lose it, then you're back subject to the traditional 1.75 times net worth cap that you have to get back under. You have a 5-year cure period from the NCUA to get back under that cap. But essentially, you can't do anything because if you are way over that cap, you basically have to let those loans roll off and you can't do any new loans because you need to get back under the cap. So it's something that credit unions need to be mindful of if they're utilizing that designation and continue to monitor the census tracts in the communities that they serve for any changes and have a plan in place. What happens if? So you have that 5-year cure period. You can get it back. If you lose it, doesn't mean you lose it forever. But you need to think about what you can do to be able to either grow your field of membership to serve additional communities that can replace those census tracts that have changed. You can do that through expansion or through mergers and acquisitions. You can also target student accounts. So students are considered low-income designations. So some credit unions will create a strategy to go target universities or to target student accounts to be able to build that up and maintain and regain that low income designation. So it's something to be mindful of. It is definitely something more and more credit unions are utilizing. We just hope that credit unions understand that it's not permanent and have a plan of action if something were to change. And then just me personally, There's a couple of concerns that I have about it in the future.
Okay.
One is related to the CFPB's 1071 data collection rule for small businesses. So credit unions are included in that and will be required to collect demographic data on their commercial loans in the same
Yep.
way that they do for mortgages and consumer. Now, that's important because currently regulators don't have demographic data to be able to regulate against on the commercial side. So if they are collecting this data, regulators will have the ability to see the data and see where the commercial loans and the portfolio is made. To me, there's concerns there that it could result in a Community Reinvestment Act type of legislation for credit unions. So credit unions should just be mindful and be prepared for that. And also for regulators to look and say, the spirit of the low income designation exception is for you to serve those low income designated census tracts. Are you making your commercial loans in those areas? And if you're not, they could be subject to some regulatory criticism as regulators gain the data points to be able to evaluate that. So that's not from the regulators. The NCUA hasn't explicitly said that.
Yeah.
I think they've hinted at things like that. That's just my opinion as I look at this low income designation exception as a whole, and just hope that credit unions keep those things in mind, having a plan for losing the designation, and then understanding the future regulation that may be implemented if you're utilizing that designation to increase your portfolio beyond the regulatory limits.
Yeah. I want to ask, a couple of years ago, you all acquired the CUSO member business lending, which was focused on SBA lending and enabled you all to kind of fill that gap with clients. Now, I want to ask, how have your credit union clients been in the SBA lending space since that acquisition?
Well, good. And it seems like it's been 12 years, but it has been about 2 since we went through the acquisition.
Yeah.
Those are always challenging situations, but it was done on purpose. We wanted to be able to mirror what CUBG has done for the last 20 years on the conventional, largely commercial real estate side of the business, but allow credit unions to get into the SBA space. That's been a real strategic objective for us, as we feel like credit unions should be doing more SBA lending. They're not, and it's really a staffing and resources issue. So we wanted to be able to create a turnkey solution to be able to allow credit unions to get into that space, and that's what we did through that acquisition. And we've been able to exceed our targets of new credit union SBA programs that we've helped start since the beginning. We continue to grow that and continue to try to educate credit unions on the importance of SBA lending and the importance of serving your community and the importance of SBA lending with regard to the growth of commercial deposits, which we feel is really important for credit unions. So we've allowed them to have a credit union centric partner. We're all about credit unions and we're here for the credit union industry.
Of course.
There's other partners out there that might not be credit union centric. We wanted to create one that credit unions have been able to trust for decades and be able to help them grow their proportion of SBA loans in their portfolio. Number one, to diversify away from commercial real estate. That's important too. There's a high concentration, but just be able to serve their membership better. You know, credit unions today only do about 2.4 of all the SBA loans that are done nationally, which seems counterintuitive to the credit union mission, right? Credit unions are there to serve the underserved. The SBA's mission is to be able to make loans to underserved communities and those individuals who wouldn't qualify for commercial lending traditionally. So there's a lot of alignment and synergy in the mission. It's just been a staff and resource issue for credit unions to be able to do that. So it's something that we're really passionate about. We feel like credit unions can really step into the community banking space and grow. The community banks have been consolidating and creating financial deserts in underserved communities, and credit unions need the ability to go into those communities and be able to grow not just their consumer base, but their small business space. And to be able to do that, you do that with the small business loans or the small business administration loans, the commercial deposits, and not necessarily strictly with commercial real estate. So it allows some diversification and the ability of credit unions to be better community-based lenders. We've been pretty successful. We're really happy with where we are. We wish every credit union in the country would embrace SBA. We feel like that is what is needed industry-wide, but we're getting there.
May I ask a quick follow-up question, Justin? Who's yelling in the background?
Oh, that's my 5-year-old son.
Yeah, what's his name?
Hudson.
Hudson. We love you, Hudson. Keep yelling. I love it. Okay, sorry. Go ahead, Natasha.
Surprise guest. Yeah. No, we welcome it.
Oh,
We all
I was
welcome it.
laughing. kind of hearing him.
Yeah.
Oh, that was great.
Okay. All right. Well, thanks, Justin, for describing that. I know I love how you've elevated the fact that SBA is in line with credit union's mission. So hopefully we'll see that pick back up. So I wanted to switch gears here. Speaking of banks, which you mentioned in the last answer, obviously there's been a lot of credit union bank acquisitions. That's continued. We get news of those pretty regularly throughout the year. So I wanted to ask, so when a credit union acquires a bank, it also acquires its commercial loan portfolio. What are like some issues that typically come up, or maybe there's blind spots they have around that process of acquiring that portfolio and then taking it on as their own? Anything that's happened with any of your clients that you've kind of learned, or like certain advice that you give to those credit unions?
Something that's happening at kind of a record pace today. I think the banking associations are keeping a close watch on it, are concerned about that. But it's great for credit unions. Again, it allows credit unions to be able to expand into markets that they don't currently serve. And I think the motivation for these acquisitions for credit unions is largely to get into underserved areas and be able to serve those, versus on the banking side, consolidation sometimes just means that credit unions are being absorbed into larger institutions and are vacating those spaces. So we've been very supportive of it. On the commercial side specifically, I think credit unions just need to be aware of what they're getting into and what they're acquiring in that commercial portfolio. Staffing and resources are usually more abundant than they are in credit unions, and it allows community banks to be able to do more sophisticated and more labor-intensive type of lending. So more C&I lending is kind of the industry term for that. So asset-based lines of credit, things that require sort of intensive monitoring that credit unions don't always have the staff and ability to monitor effectively and have effective programs. That's why their concentration's highly in commercial real estate. So just understanding that makeup and then understanding the risk in the portfolio, the types of loans that they're acquiring. We've always been a partner with credit unions that are acquiring banks to go in and evaluate that portfolio independently. That's a big part of what we do. We try to make sure that they fully understand what they're getting into and what they're acquiring. They're acquiring those assets, but they're also, assuming those risks. So we want them to not just rely on the NCUA's exam to understand what they're getting into. They need to do an independent third-party review of that and make sure that what they're acquiring on the commercial side is congruent with what they're doing currently. And if not, that they have a plan of action to be able to increase staff or increase technology or whatever it takes to be able to support the type of loans that they are acquiring. One easy way is to obviously partner with a CUSO, but make sure that they know what they're getting into. The worst possible scenario for a credit union there is to acquire a portfolio that they're unable to monitor and service going forward. So things like C&I loans, the ability to be able to monitor those on a monthly basis. It takes a lot of back office support to collect financials and collect documents.
Yep.
If they acquire those and don't keep up with the monitoring, they're setting themselves up for regulatory scrutiny in the future. So just have a plan, not just a plan to understand what you're getting, but a plan to be able to serve those loans and be able to service those appropriately. And if you don't have the internal capability, it's easy to partner with somebody, but at least have a plan. And then understanding how many of those loans fall outside of your current commercial loan policy or outside of NCUA reg. You are allowed to keep those loans, but if those loans mature or if you're going to refinance those loans, you have to bring those back into compliance with your policy or within reg. So understand what loans you have there, what the possibility of those loans is to, are to refinance outside of your institution, or if you're going to be servicing those loans beyond maturity, make sure that you're either adjusting your policy or you're adjusting the terms of those loans to be compliant with your regulatory, either state, federal, or your policy requirements. So I think knowledge is key, understanding what you're getting into. These acquisitions aren't solely for the purpose of commercial lending by any means. Yeah. It's important that the commercial lending team be involved and that the commercial due diligence is at the same level as the consumer and the account due diligence.
Justin, you previously mentioned one of the goals of CUBGs is to see more small businesses acquire their loans from credit unions, not fintechs. How is your organization leveraging technology, you were just talking about tech a bit, to help credit unions make more small business loans and better compete with fintechs?
For us, it's education, right? Credit unions have always historically done a great job on the consumer side of keeping their members within their walls and keeping them away from
Yep.
payday lenders and other predatory lenders on the consumer side. The loan growth that we saw over the last year from the NCUA data showed payday alternative loans as being one of the fastest growing sectors in
Hmm.
lending for credit unions.
Yeah.
Now, I don't know what that says about the state of the economy, but it also says that credit unions are being effective in steering their credit union members away from predatory lenders.
Yep.
So carrying that over to the commercial side seems intuitive, but it's a challenge sometimes. Credit unions on the commercial side want to treat everything the same, and it's sort of impossible to apply the same metrics to a $10 million commercial real estate loan that you would to a $50,000 small business loan. Some of that is changing the culture and getting credit unions to think like consumer lending. A lot of those situations, you would have the same borrower be able to walk into a branch based on their personal financial status and credit score and be able to walk out with a loan in 10 minutes.
Hmm.
On the commercial side, it's the same individual, a small business. They're essentially the entire business,
Right.
but they're put through a longer, more arduous process simply because it's a commercial loan. So the ability of getting credit unions to rethink that, don't overcomplicate things. And then the ability to leverage technology. So the ability to be able to offer the same type of turnaround that a business member would expect from a fintech that is outside the credit union walls. So the ability to do automated underwriting, the ability to have quick, fast turnaround, not only in decision and evaluation of financials, but also closing. So at CUBG, we've seen this over the last couple of years, the need for credit unions to go down this path, and we want to be there to assist them. So we've developed programs and leveraged technology to offer automated underwriting, to offer alternatives where
Hmm.
CUBG can review the financials and with a 24-hour turnaround period, be able to do the docs and help you close, or be able to facilitate an online application for you to utilize automated underwriting, utilize analysis within the walls of your credit union, and close there too. So we're super flexible with how credit unions want to leverage technology. So we have a product that we call Fast Track, but it allows credit unions to leverage fintech like technology,
Yep.
but do it in their own way. If you go to a fintech and sign on, you might be subject to only doing loans through the process that the fintech is built to facilitate. So we
Hmm.
allow you to be able to pick and choose what you want to handle, what you want to outsource, if you want to outsource anything, but allow you to be able to compete. And credit unions really are competing with community banks in that space.
Yeah.
And you just need the ability to provide a quick turnaround and meet the small business owner's expectations. Like all of us, we're used to being able to get instantaneous decisions on loans, either on the consumer side or business side. So the ability for credit unions to have an option to do that, to meet their borrowers' expectations, and again, keep them within the walls and safety of their credit union, their financial institution, and be able to retain those loans and deposits. Historically, about 8% of the small business loan applications go through credit unions, which is
Hmm.
exceptionally low. I think a lot of that, again, is changing the culture and the mentality around how credit unions address these loans, and also the ability to have some sort of technology that you leverage to provide a similar member experience to what you are able to achieve on the consumer side,
Yep.
or what consumers today expect from a loan application process.
Okay.
Really, yeah. Well, that's great that you're supporting that with the Fast Track product. It's important with this whole competitive landscape. So, okay, Justin, I had just one final question before we move on to part two of our interview here. You mentioned this at least once as we've been talking here. So, I know in your career, one of your stops included working at a community bank. And I think that brings a kind of a unique perspective for you now in your current role. So, I wanted to ask, what are some of those unique perspectives and knowledge do you think that helped you bring into your current role here, or just working on the credit union side in general?
It's been tremendously beneficial, even though it is the dark side. And I went to,
Yeah.
the 4-letter word bank. So, I try not
Mhm.
to advertise that a lot. But community banks are, especially on the commercial side, they are more adapt to commercial banking and commercial services. That is a larger part of what community banks do. So it's important to have that exposure and to be able to carry that on to the credit union side. Now, I kind of sandwich my community dark side space with credit union work on both sides. So started in the credit union industry, went to the community banking space, and now back into the credit union industry. But it gave me tremendous perspective. I was able to run the entire lending side of the bank. So that included both mortgage, consumer, and commercial, though banks, again, are heavily weighted to commercial. But it allowed me to get back to my roots of lending on the consumer side, which is where I got my start. It also allowed me to be able to understand what credit unions are faced with in managing their entire loan portfolio, not just on the commercial side, but holistically on the consumer and mortgage side. Also, the ability, as part of a 3-person executive team that ran the entire bank. So the ability to understand the challenges that credit unions go through in managing their day-to-day operations, of ensuring that they're adequately capitalized, that they're managing risk, that they're following regulation. So it was tremendous exposure, and it just added to experience in allowing me to be able to have been in the shoes of most of the individuals that I'm able to talk with at credit unions. So I think a big part of the value of CUBG is that most of our employees have set in the respective roles of those that we are talking with or consulting with, or we're providing advice to. So we know what to do, and probably most importantly, what not to do from personal experience, and can be able to share that perspective. And it provides tremendous value. And I think it goes a long way with our credit union clients to be able to understand that we know where they are. We've been there, and we've been in the exact same role, in the exact same situation. So again, we can provide sound and quality advice based on our experiences. And they aren't always positive, right? I think you learn more from things that go wrong than you do from things that go right.
Sure.
So the ability to have that experience and advise our clients on the proper way to move forward. So it's just another experience that I can add to our ability to help serve our credit unions in their highest capacity.
Absolutely. Well, I'm sure the credit unions really appreciate that and feel heard, feel seen, just knowing that the people they talk to are understanding of their position. So that's great. Okay, Justin, let's go ahead and move on to part 2 of our interview. This is the really fun part because it is all about you. Are you ready?
I am. This is
Okay.
probably the
All
part
right.
I'm most
Let's see.
uncomfortable
Yeah.
with, but I'm ready to go.
Okay. We'll see. It'll be fine. Okay. So obviously you're based in the Portland, Oregon area, which is still technically CUBG's headquarters, but I believe you're originally from Austin, Texas. Is that correct?
Yes, I am.
Yes. Okay, so question is, which city, Portland or Austin, which city deserves its Keep Portland Weird or Keep Austin Weird bumper sticker more? Which one do you think is weirder?
Now, this is highly controversial. I've spent the last 8 years in the Pacific Northwest in the Portland area, so I consider myself,
Okay.
Northwesterner today. But this is definitely highly controversial, and it comes up every time that I'm there. I was just in Austin last week, and this is always a question. I think technically Austin had it first, and Portland copied it a few years later. But having spent a significant amount of time in both areas, I can say unequivocally, without a doubt, Portland is weirder.
Yeah.
But they're both weird in their own unique ways. I think in some ways, if you, having been a native Texan, I can say 50 degrees is cold to a Texan. That might not be applicable to everybody, right? Someone in Anchorage,
Right.
Alaska definitely doesn't think 50 degrees is cold. And as I sit here today, it's well below 50, so it's cold. I think what's weird to Austin doesn't always translate to exactly what's weird in Portland. I think Portland might be on a little bit different level, but they're both weird. They're both really fun cities. And it was really easy to make a transition from Austin to Portland, as culturally they're very similar. Austin
Right.
is unlike most of Texas in that way, and is really kind of Portland South. So they both deserve the name, but I think without a doubt, Portland's weirder.
Well, and I don't think Austin has a naked bike ride, right? Isn't that just a
They
Portland thing?
don't.
And that to me, that's weird. Do they? Or
They don't. But having lived in Austin, if I was sitting at my desk at work and someone rode by naked on his bike, it wouldn't be that unusual.
that's surprising. Okay.
They definitely don't have a
Right.
bike ride.
Yeah.
I have a couple of follow-up questions about Austin really quick, but I do have to mention, so I am in Madison, Wisconsin, and they do have a naked bike ride around the square every summer.
Oh, wow.
It's
Okay. So it's not just
shocking.
Portland.
Madison is in that Austin-Portland category.
Sure. So, Justin, I lived in Austin for a while and loved it. Absolutely loved it. I have 2 quick questions for you. One, did you have a favorite taco place?
Veracruz is
Veracruz is
a
great.
local taco place that is great. And the last time I was there, I made sure to go there. But there have been so many since I've been away that have changed completely. I remember Torchy's Tacos, which is now a national chain.
Yeah.
I remember it was a food truck. It's changed tremendously. I think it was
Mhm.
much better when it was just a food truck.
Yep.
But that's one that comes to mind that was a go-to for breakfast tacos. And then the concept of breakfast tacos as a whole is kind of an odd concept up here. And when I mention it,
Yeah.
people
It's
look at me
so
strange.
good. It's so
Mhm.
good.
But anywhere that had a great breakfast taco, I'm all in.
Torchy's has the best queso, I think.
They do, yes.
But I will say on the go, if you're at Austin Airport and want a breakfast taco for your flight, Taco Deli is there. And
Yes.
I always grab 3 or 4 on my
Yes,
flight.
Taco Deli was a mainstay on the
Yep.
lunch circuit when I was working.
My second question is between Austin and Portland, where do you smell pot the most?
For sure, Portland, although I smell it everywhere. I think I was
Yeah.
in DC and smell it. I've
Yeah.
been to Boston and smelled it. It's very unique. I
It
think
is.
just to that point, I think the next multi-billion-dollar idea is to somehow create an odorless marijuana because that
Oh,
is
great
to me
idea.
the biggest drawback.
Yeah.
You're in a nice hotel, you get in the elevator and
Yeah.
it's pungent. And that's the biggest
I
drawback.
think it was on Jimmy Kimmel one of the last few nights, and he said, I guess DC is now rated as one of the very top, like, pot consuming
Oh,
places in
wow.
the US, which
Oh,
is a little
good for
surprising.
DC.
I was surprised. So I was the last time I was there was I think for GAC, and it was very prevalent. And it's become more and more prevalent everywhere I've gone. I was just in Colorado; it was prevalent, but it is definitely prevalent here. I think I
Okay.
could pull up a Google map and there'd be 20 dispensaries within a
Sure.
a
Right.
mile.
Yeah.
Okay, so as of this recording, Thanksgiving is coming up. Wanted to ask, what's your favorite Thanksgiving dish to eat?
Stuffing, without a doubt.
Great. Wait.
Nice.
With meat or
Either way, I'm kind of agnostic to it, either just plain cornbread stuffing or
okay?
breadcrumb stuffing, or I think just being from the South, cornbread stuffing is kind of the
Absolutely.
mainstay.
Yep.
But stuffing is absolutely, I cannot live without stuffing at Thanksgiving.
Great answer.
I'd have to agree with that. That is, top.
I guess some people call it dressing. It's
Yeah, I was
stuffing.
say, don't call it dressing. Yeah, in Oregon, they'll be like, "Huh? Like salad dressing? What do you do?" I know. I lived in the South too for a little while, and I thought that was one of the odd Thanksgiving things. But okay, and then next question. Speaking of the holidays, all coming up right now, right around the corner. Do you have a favorite holiday season tradition that you're looking forward to, either with your family or even with, I don't know, maybe with your staff? I don't know if you guys do anything.
Well, so we always put together a Christmas card, which is always fun. And our
Yeah.
marketing team helps us put that together. I'll throw on a Santa suit or a Grinch suit sometimes for meetings. That's always fun. It's different in a remote environment today. I remember being in the office. Everybody. It was a festive time. We would do potlucks, and we would have all the vendors send all the gifts. So going through and eating all the different chocolates and things like that come in. That's still good. We have a training in our office in a few weeks, so we'll be able to get back to the office and be able to do some of those things. So looking forward to that. And family-wise, you may have heard my son playing music or
Yeah.
yelling at the top of his lungs in the background. So just seeing the holidays through a child's eyes, so he's 5 years old, has been probably one of the more amazing things.
Oh yeah.
That's kind of been the new holiday tradition, taking him to different places to go see lights or
Okay.
to go experience holiday things. Just seeing the magic of the holidays through his eyes has been pretty magical.
Very good. All right, let's talk about your younger self really quick. What was the first album or CD you ever bought?
I cannot say for certain, but I have
Okay.
to imagine I'm a child of the 80s, so it definitely wasn't a CD. It was probably a tape.
Mm-hmm.
Yeah.
It was probably Vanilla Ice or MC Hammer or something like that.
Nice. Yeah.
I don't exactly know.
Oh
Yeah.
my, sure.
Love it.
That genre, early 90s, late 80s is
Okay.
probably where.
Well, looking
Yeah.
at our spreadsheet, I believe you're the first to bring up Vanilla Ice and MC Hammer as their first
There you see.
album CD. Good job.
All right, and final question here, Justin. We always end our podcast with this question with all our guests. What was the last movie you watched?
This is going to be extremely boring because I haven't seen an adult movie in about 5 years.
Okay.
Although I think technically the last adult movie I probably watched was Oppenheimer, and I think that was on a flight, a late Friday
Sure.
flight back from a conference or something. Nightmare Before Christmas, oddly enough, which is it's not one that
Oh.
I ever watched
Oh,
before,
okay.
but my son got really into it. We had this instant transition from Halloween to the holiday decorations, put our tree up and lights and everything. He was really excited to do it. I've always been a traditionalist and said you can't do any of that until the Friday after Thanksgiving, but I've
Mhm.
been overruled. So
Okay.
I think there was a weird tie-in between the holidays and Halloween, and that movie came up. And oddly enough, is a pretty well done movie. It's kind of a musical,
Yeah.
Oh,
and
yeah.
it was more than what I expected. But most of the movies I've watched lately are Disney movies or animated movies, so nothing super
Sure. Yeah.
exciting. I used
Okay.
to make it a point to watch every film that was nominated for Best Picture before
Hmm.
the Academy Awards. I haven't
Yeah.
been able to do that in quite some
It's
time.
hard to do as a parent.
Yes.
Sure. Yeah.
Great.
All right. Well, Justin, I know we could talk for hours, of course, but unfortunately, we have to wrap it up. So, Justin Conrey, CEO of CU Business Group, thank you so much for joining us. We had a really good time chatting with you. And yeah, I look forward to seeing you hopefully soon back in Portland.
Yes, absolutely. Thank you guys so much for having me.
Thank you, Justin.
Thank you, Justin.
Thank you.
And for all of our listeners, please subscribe to shared accounts with CU Times anywhere you get your podcasts, Apple, Spotify, wherever. You know how this works. And if you want to rate us, we would love your feedback. And if you have any questions or comments you'd like to submit, please feel free to email me over at nchillingarian@cutimes.com, or you can email Michael at mogden@cutimes.com.
As always, a big thank you to our producer, Zach Nyeisel. Thanks, Zach. Join us again next week for a new episode of Shared Accounts with CU Times. Until then, thanks for listening.